So one of the risks I think we see is being a victim of our own success in some key markets. Simply it's a supply choke. We have record low vacancies in office and industrial product. And when you combine that and layer on the cost of living, you layer on some transportation infrastructure issues, the challenge we have is, do companies make the decision to simply look elsewhere to satisfy their growth objectives? So if they do look elsewhere in secondary markets or other markets within Canada, within our borders, that's fantastic. But invariably, they're looking elsewhere. Technology has made it possible to look beyond our borders at other markets, other cities. And so if they simply choose not to set up shop here or grow and expand here in our Canadian markets, I think that's a huge risk. I think a second major risk is not embracing risk itself. With so much uncertainty, Trump, tariffs, trade, labor costs, prop tech disruption, ever-changing occupier needs. There's just so much change and uncertainty that I think the big risk as Canadians is that we just take a pause. We have some decision paralysis, and as a result, we find ourselves as being sideline observers and not making the bold decisions, not innovating, and being left behind watching companies grow and expand elsewhere, watching other communities and cities grow. So I think that's a huge risk, is just not embracing, mitigating the risk, but embracing it and making bold decisions going forward.
Capital does not need to invest. Capital is competitive and has many opportunities globally in which to go and participate in the market. I feel that Canada competes against other global countries with real estate, and I believe that Canada, not all markets, but certain markets, are facing a thinning of the competitive landscape, which will put an impact on pricing, because there will not be as many people looking for that type of real estate in this country.
Well, I think one of the best investments, and what I like industrial. The supply chain is the competitive differentiator for many, many companies. And the demand to own, to occupy, to have something built that the market currently doesn't provide is enormous. So I think for investors and developers going forward, to get those industrial buildings out of the ground, they're going to benefit. They're going to see incredible appreciation in net rental rate growth and insatiable demand. So I think the biggest opportunity is in the industrial market for us.
So because I think there's going to be less capital focusing on certain assets in Canada, I think a great opportunity is go where capital is not, because typically then you can get outsized returns because it's a thinner market. So at Slate, we'll continue to try and go where other capital is not and try and get outside returns.